our third speaker is Miss Priya Thachadi. I got it right now. Okay. She's co-founder and CEO of Vilgro Philippines, co-founder of Newshoe Network, and co-founder of Unlock Impact. Priya is an entrepreneur, investor, and gender advocate working across South and Southeast Asia. She is the founder and CEO of Vilgro, an early-stage impact incubator that funds, mentors, and nurtures social entrepreneurs. She also co-founded Unlock Impact, a social impact advisory firm focused on scaling inclusive solutions that tackle gender and climate across the Asia Pacific. Priya is the chair also of the Aspen Network of Development Entrepreneurs, or ANDE for short, East and Southeast Asia Steering Committee, and a member of the ANDE Global Advisory Committee. She is the host of the podcast Talk Impact, a show for and about leaders at the front lines of social change in Asia. Priya is a passionate advocate for gender equity with a focus on unlocking capital to fuel ambitious women entrepreneurs. She co-founded and runs the Newshoe Network, an award-winning platform for women entrepreneurs across Asia to connect to capital, coaching, and community with 600 plus members. In 2020, she was recognized as a Youth Gender Champion by the UN Women WEPS Awards and awarded the UN Women WEPS Awards for Innovative Financing in 2024. So
everyone's doing okay. Post-lunch session is always a bit difficult. But thank you so much. Thanks. I think, I was sitting there thinking that, having 10,000 followers on social media is enough. Then we saw Vince's stats. But Vince, thank you for being so candid. And I think you made my job much easier because you said all the controversial things very early on and set the tone for a very open discussion. So really wonderful to, kind of see the work of SEDPI and Peace and Equity Holdings as well. I've been following their work for a long time, and one of the first organizations I met when I first moved here to the Philippines almost 10 years ago, and really just following in the footsteps of all of the good work that's been happening. So I had kind of similar thoughts that I wanted to share about impact investment, so I'm glad that Vince kind of set the tone. But just very quickly, I set up an organization called Vilgro about 6 years ago formally, but really been working here locally for the last 8-9 years. And as Ron's very generous bio shared, that Vilgro is really, we're both an incubator and an investor. And I think we kind of come at the stages of focus on enterprises a little bit after where Vince is focusing, and typically, and I'll share, where PEF also focuses on. So that's why I kind of request to go a bit after them so that we can talk about the different stages. So the focus that we have really is also, I think it's very interesting to be here because social enterprise, you'll see that in all of our presentations, we all defined it. And my slides will also do that because it's such a broad term and it encompasses so many different things, right? All the way from, the nano enterprises to these big tech-based startups that can really scale up, and anything in between. And I think all of us feel a sense of ownership of that is, social enterprise. But the truth is that we all work in this continuum and at different stages and at different types. And so our work really has been focusing on those just beyond microfinance. So any, size-wise, I would say enterprises that need beyond 250,000, pesos would be, typically anywhere from $10,000 onwards. And our focus as an incubator is really, we have two arms, or rather we actually have 3 arms, but really the incubation is really focused on finding early stage enterprises, or like I think in the earlier presentation, like the startup proof of concept to the early growth. We work across that space. And for us, the definition is really looking at, we only work with businesses that have a direct social or climate impact, and those that are benefiting, vulnerable communities of any type, but typically at what we call the base of the pyramid. And without that, that's the first lens that we use, so it has to be impact first. It's not like a side outcome or just defining as when you're saying like ESG, like somewhere we can tick something. That's really not our focus area, so there needs to be very clear impact. And we broadly work in 3 sectors. First, of course, is climate. Within that, whether it's plastic, circular economy, nature-based or conservation, as well as affordable and climate-resilient housing and health. And of course, we have a very explicit gender lens. And so, if you look, we've directly funded about 160 enterprises. Primarily, we've provided about 400K in grants. And the rest, other investments for those who really needed it or, fulfill our criteria, which I'll talk about. And you'll see that, majority of our businesses are women-led businesses, and that's because we've had a very intentional lens on applying a gender lens, even before it kind of became a thing, as it happens in our sector. So I just wanted to kind of get a sense, are there any entrepreneurs here? Anybody who would define themselves other than Rich? Okay, a few. Anybody who is investing other than the 3 of us who are presenting? Okay. And would we describe everybody else probably supporting entrepreneurs in some way? Yes? Okay, wonderful. So, I think also just to kind of set the stage, all of us know that we've kind of moved beyond sort of the traditional definition, and social enterprises or businesses that are doing good or creating impact have become like that 4th pillar. But where we really work in, there's like a spectrum, right? There are non-profits also who have revenue generating models, all the way to just purely profit companies. And where we really focus on is the social enterprise, social business lens. And I would say that going back to Kashi's earlier slide, which is very detailed, I think broadly here we are seeing, I'm saying beyond the nano and micro businesses, really 4 of these types of enterprises. And typically, majority of our work really is focused on impact enterprises. Sometimes we do work with cooperatives and community-based, but we have different interventions for them. And I think for us, going back to, if you remember what Vince was saying, we are operating specifically in the area of market-driven models, because that's kind of where we see that our thesis is that market-driven models can really, at certain scale, can really make a dent in all these very pressing issues. But we do see that, I think my experience now is that most of the enterprises I've been seeing, so I think there's a bit of a hard reflection to kind of be had, because there is a lot of stagnation in our sector, and I think we have to admit that. And even though, like, technically speaking, when we look at the ecosystem, it's grown a lot. There's so many more people, like, I travel all around the country, and everybody wants to be a social entrepreneur or wants to be a startup, so there is a lot of excitement. But it is tough, and actually this last sort of 12 months have seen a lot of enterprises that were operating when I first moved here about 10 years ago actually starting to close down. And because it has, pandemic of course affected a lot of enterprises, but also somehow there isn't enough support or there wasn't enough product market fit, even though the impact was really there for a lot of people to continue. They've made the hard decision, many entrepreneurs around the country actually. Just to give you a sense of like what are the types of businesses that we have been supporting. Again, there were some here that had actually closed down, so I had to this is a slide from long ago, but I thought it might be worth talking about. And some of them would fall into they've all raised money. And just to give you an example, Kubo and Billion Bricks are really in the housing space. One uses a very innovative solar roof. So there's no roof, the roof is a solar panel. And they're really wanting to change what low-cost housing and what the image of low-cost housing that we all have. They're really challenging us and really building very beautiful but low-cost homes. And Google is really looking at using bamboo as an alternative material. And say somebody like an agro-digital, which is really doing farm to market, but really using technology well, but working with cooperatives of farmers to enable them to really unlock bigger contracts, right? So to see these are the kind of businesses that primarily that we have been investing in. But what we are seeing is really that many are either getting stuck at this early stage, and not able to cross this valley of death. And why, and this is kind of more a startup term, but the truth is that we have not been able to bridge this gap. And a big part of it is definitely that the capital is not really meeting the entrepreneurs where they are. And we're all trying to convert them into something that maybe they can't be. So there is definitely a gap. But this is not the only thing of cost of doing business. And as we all know, if the entrepreneur has to go to BIR, then 3 days is probably lost. Because then you show up, maybe the printer is not working or something else, right? Those kind of issues are also there. Especially for small business owners, it's really a challenge. Or the fact that somebody still has to stand in line, right, at banks, and your half-day goals, right? So these are the realities that we're operating with, but that is not only the reason, but that is really the reality of the operating environment. And as much as we talk about solving everything, those things, maybe it's not something that we can do individually, but those things also have to improve, but it is the reality of a small business owner today. And I think going back to, what Gauchi was saying earlier, a lot of them don't want to formalize, or because then it's just so painful if you have to deal with, if something goes wrong, then you're really in a mess to just solve it. So we can understand. But a big piece for us that we do see is that the risk capital is missing. And this capital, what it should be is also, if we talk to big impact investors, they think about it differently. But on the ground, we are seeing that a lot of enterprises are still very dependent on grants, or they're waiting for some, government benefits which we don't know. Some scheme was announced, but it really hasn't come yet, or it hasn't reached them, or they are waiting for some other opportunities, right? So there is a gap with what's existing. It is a very liquid market. There's a lot of capital available, and even when we are talking to, it's nice to see that some of your enterprises got money from DBP and Land Bank and stuff, but it's also, even though there are many actually very thoughtful schemes, but it's quite hard to unlock, especially if you don't have the collateral, right? So the risk capital is an issue that I've become a little bit obsessed with, because I do see it. I think the number of capacity building organizations have increased. More entrepreneurs are trying things, which is super brave, but we're not really seeing them being able to jump that valley of death. So then this is kind of the typical startup life cycle. But of course there's a parallel world of alternate financing that kind of also follows this path. But what we do see is that, as Vin said earlier in his slide, most of the capital focuses on above $500,000. If you can get there, and then you're reasonably good, you will find the capital. But below that, and you can also find, so I was just looking up the data, on impact investment, and 75% of impact investment capital that has been allocated in the developing markets actually goes to microfinance and funding, microfinance institutions. And that's where the focus is. So it's actually only 25% that's going to other types of businesses, so beyond microfinance. And in that 25%, 60% goes to these later stage. So then when we actually start carving out, the money is itself small. There are lots of other problems with it, but even the actual capital that's coming into our markets is still quite small, which means that somebody has to fill this gap, right? And so we are seeing that this missing middle is actually still, it's a term that was there maybe 10 years ago, but it's still very, very much a problem, and it really hasn't been addressed. And if we want to see, and whatever we define as success, right, or enterprises, I think this is an issue that we kind of have to address. And I think what you've heard in the earlier examples are just different ways along this continuum of capital that is being addressed. So I'm very much on the sentiment that everybody agreed earlier on, that there is a problem. There is a problem with the investment market, that there is a problem with the capital that is here. And somehow we always put the onus on the entrepreneurs or the businesses that they have to get better, they have to train more, they have to get more mentors, they have to get more training, they have to get organizational development, they have to get, better bookkeepers. All of that is true, but unfortunately the capital and the system really hasn't moved to actually meet them, to make it more appropriate. And I think that is the gap. And there's not enough incentives for people to do that, because they'll just wait for the better deals or just keep funding the same businesses, right? And so I think that is one big challenge that we haven't really challenged as a group, I think, locally also. So I'm going to skip all this because it was all beautifully covered by Vince. But we have seen what is interesting is that the tech investment scene in the Philippines has definitely, this is really tech startups, but primarily most things are either going to fintech or to other apps. I don't know if we need them or not, but there are many more apps today. And they have actually been receiving more. Now, why is that? I would say that actually first a lot of the capital went to Indonesia and Vietnam. They probably invested most of the startups there. But very interesting, the pandemic is when this ecosystem grew. Till then there really wasn't that much. There were just some global investors. But we have seen, more than 15 to 20 locally based investment firms come up. Let's not go into who the profile is, but it's the typical profiles of people who do set these up. But the exciting thing is that these are now locally owned funds, which was not existing before. Many of them are, of course, corporate money, but some are also smaller funds that are coming. So why is this relevant to us in the impact space? I think, if I go by my experience, I don't know if I mentioned I'm from India, but, is that we did see, as the tech investment space grew, we did see a lot of diversification of capital coming into more sort of smaller scale impact investment. But it's still early days for that kind of transformation to happen yet, right? So where we are seeing still the issue is in this gap, $50,000 to $250,000. So I would say anywhere from 2.5 million pesos is kind of where we are seeing a lot of issues, and this is becoming quite hard because the enterprises, they may have some sales, they don't have all the paperwork. So I would say that I've been waiting sometimes in some cases for more than 6 months for the enterprise to get back to me because I asked for audited financial statements. I'm still chasing them on Messenger, on email, on Viber, everywhere. But actually they haven't, until they were coming to fundraise, they didn't really think about all the financial compliance and all that. So it actually, it's not that they're running away from me, but they're actually making, really catching up on all the paperwork. So it just is a, inside joke. But I think the issue is that in majority, if you talk to the entrepreneurs, they kind of feel very frustrated that they keep getting no's. And that's because the capital is not at the risk level, or the appetite doesn't match with where the business is. And most cases, the ticket sizes as well. So we are really focused on, the broad spectrum, which is, of course, we are doing a lot more debt because we found that a lot of enterprises really just need, they can't really absorb equity investment because they cannot provide those type of returns. But they're actually really good candidates for debt, and I think as proven by the earlier speakers as well. So we are really focused on the seed stage, or this ticket size of $50,000 to $250,000. So I would say up to 15 million pesos. And I just wanted to share, last year we did a report on the gender financing gaps, but I would say that broadly, many of these learnings can be applied, not just to women-led businesses. So the businesses, I think going back to Vince's first slide of how we started, right, with just 100,000 pesos or something like that. Entrepreneurs today are actually starting with just 50,000 pesos at the most. And they are just self-financing or managing just with the immediate revenue that they have for the most part. And they are choosing actually not to borrow from formal sources, but first from family and friends, right? And we saw that many actually need only up to 1 million pesos immediately, right? Like right now there's an order, somebody on Messenger told them that they want this, but they're not able to deliver. This is the most common problem that I hear when I talk to entrepreneurs. They have the orders, but they can't actually deliver, right? And they really kind of feel quite uncomfortable about fundraising. Either they don't know, or they have heard all these bad stories, and so they don't want to get into it. So we found that many of them, of course, did express that when they see the checklist of all the things that are needed, that does bother them as well, because they haven't probably invested the time around that. So we kind of found that the core problem that we are seeing is that the appropriate or the kind of the tailored financing what they need is not there broadly, right? Because most of even the debt products have pretty standard terms, which would be like a monthly or a weekly payment, they're really not flexible in terms of their revenue-based financing, which is tied to whenever they say, they have a 6-month harvest period. Like, they really can't pay in those 6 months. They can only pay at the end of that harvest if it's an agribusiness, right? So we did find that, the appropriate financing is the thing. So the question really comes, I think, for us as an industry, what is really the appropriate product for them? We did find that they, primarily the ticket sizes, the size, either they are too small for the funders who are easily visible, or they can't really match up to the requirements, right? We also found that there's a very interesting thing. I think a lot of the times we do kind of say that, okay, the financial literacy is really poor. We actually found that, especially in our women entrepreneurs, that was actually pretty good. They're very good with money in managing, doing a lot with very little money. But what we found is that there is an investments literacy. They don't know how to navigate this, like the terms, when they're looking at, I think I didn't see one of the government agencies that has been very proactively funding agri-businesses. A lot of people have taken the loans, but they've actually not understood I don't even think the agency has understood exactly what are the terms, because they're kind of stuck and they're actually going to lose a lot of their ownership, which they've not really understood. So a lot of the times they don't understand the terms. So it's not really a financial literacy problem, it's really understanding investments and this capital infusion that's really coming into your business. But if you talk to the investors, they're also saying the same thing. We don't have anyone, we're waiting for the investor, we're looking for the investable companies. So that's also a common sort of point, and I think it's because it's not matched. The need and what's available is really not matching. So they are saying that, we're not actually finding them, right? We're not finding them. Either most of the people that we are meeting are just too early. So there is definitely a gap between the products that are available and what they actually need. And I think it's nice that we're all here together. Like we don't actually share what's going on with each other as a local ecosystem. I don't know if somebody else's deal went bad or something really worked out well. I was really excited to hear about, the evolution of SEDPI and, the products that you have. But I think we talk very little to each other. Maybe I'm seeing it's very, very bad after maybe 6-7 years. But I think that's the other big problem, is that we really have to learn, especially in financing. There's a lot of risk and we have to talk to each other. So everybody here who has, an enterprise in your network that needs to be funded or figuring out what to do, we must all talk to each other. Hopefully we will do after today. Yes. So I think for me, the gap that I've seen is really, and how do we really move forward? The problems, of course, are many. And I do feel like the problems are not as contextual as it is. Like if I go to any other market in the region, if I dial back to India 10 years ago, it was all these same problems. So I feel like these are not unsolvable problems. These all can be solved. But I have to kind of, there is a problem that we are not unlocking enough local capital. So it's very nice to see that, in SEDPI's case, they have kind of mapped people who want to give back, and I think that's really wonderful. But I think there's a lot of liquidity in this market, but maybe Ron, and going back to our conversation earlier, we have to find a way to unlock this, but we have to de-risk this capital, because anybody who's an investor, even if you're an impact investor, they want to get their returns. And I think there is a misunderstanding about that fundamentally. And that's what they, probably more worried about. And so I think that's where I'm seeing the gap. I do think that today the market is quite risky. Many of the entrepreneurs that we see, we have to work quite hard over many, many months to get them the money, because there is a lot of risk. And by that I don't mean their intention is not good, or they don't have the quality. I think they have all of that. But many of the enterprise models are still kind of in that proving themselves, and they kind of get stuck there because they don't have the extra money to hire 3 more team members to professionalize, or they have this order, but they don't have an FDA approved facility, and they're just waiting on that, right? And those things are quite investment heavy. So there are many reasons that enterprises are stagnating, and some of these have to be dealt with at an ecosystem level. And I think we need to have some honest, hard conversations around that. But one of the pieces that we have really been focusing on is blended finance. And by that we really mean using philanthropic or grant capital to make some of these investments or help incentivize. So similar to the guarantee fund that you heard earlier is an intervention that we have. And we are really trying to map interventions all along. So what happens when they're just starting? They need a grant. And then they need something, bit more risky capital, and then they can graduate to commercial. And so we are trying to work with partners along this way. And I think we need to probably map ourselves, all of us working in this space, because we're all dealing with different subsets of types of enterprises, different stages, different financial products. And it seems like a very a simple thing, but somehow we've not done it. I don't know why. But hopefully maybe this will help us talk about it. And the last is that we actually don't talk about enough cases of what's happened. So I think because investment somehow is always a secretive thing. That we're not sharing that we got 10x returns. We're also not sharing our losses. So I do appreciate, Vince, your candid presentation of sharing some of the losses. I think that's really important to understand why. And so that we can all learn from each other, because only we can de-risk each other. So I think we need to come together more. So so who are the kinds that we have really invested in? We give grants to those to build traction, and then we provide financing to continue to grow that. So if they don't have any customers yet, or it's just one or two, very, very early, then we actually provide some grants to do that, because that's what they need to absorb the risk and actually do it. And for us, because we are really looking at those that can grow, both in the business size as well as the impact. That kind of imagination is also needed, and sometimes there is a challenge that, I think we need more exposure to different business models as well. So those of us who are working with entrepreneurs, I would say that's really one thing that I see lacking a lot. That we are a little bit insulated, I think. We think that this model and this problem is only happening here, which is not true. Somebody else has failed 30 times over somewhere else, and we can learn from it and actually grow or solve it faster. And of course, the importance of the good financial system. So just to wrap up, I know that there's only 2 minutes left. So how are we doing it? I think the first piece is that we do make some direct investments, though actually it's been very small. We've really focused on co-investments, because we do think that to change the risk appetite of the investors in the Philippines locally, and to get more people, whether it's foundations or microfinance institutions or individuals, we do feel like co-investments, but it has been very, very hard. In the last 5 years, I gave up almost 3-4 times, because it's quite depressing. Because I think the cultural realization for me is that everybody says yes, because everyone is so nice in the Philippines. And then I'm waiting for this yes to become an action, and then nothing happens, and I feel really bad, and I keep, following up. And that has happened to me many times. But finally, I have to say that we set up a co-investment facility 2020, unfortunately, just pandemic time. And finally, we have made 6 investments with about 12 investors. But it really has been a labor of love, because as much as we all say we love collaboration, it is very difficult to actually collaborate, because we all have to compromise a little bit to make it happen. And that's quite hard when we have our individual goals. So we've really built a co-investment network called the Impact Pioneers Network. As you'll see the logo on the bottom, if you're wondering what that means. And we have about 12 active investors. This is a mix of individuals, microfinance banks, foundations, as well as a few impact investors. And we are trying to sort of, in every investment, there are 2-3 of us who invest, even though we have our own, agreements, etc. And the last piece is that we've actually set up a blended financing facility. It's about $500,000, which also I really had to scrape and leverage every network. I tried to, fundraise for it for 3 years. I got so many no's, but finally someone gave me $100,000 to say, okay, try it. And then, and then it took me 3 years to actually make it work. But finally we've been able to grow that to $500,000, and my goal is to make that, so that we can actually get everybody who is saying they want to fund, really push them over the edge to actually give the money. Because I think if we need change, then we have to put money where our mouth is. We really actually have to invest. And so that's really kind of what we're doing. So the network is called Impact Pioneers Network. If anybody here is thinking about, investing in any form, debt, equity, anything in between, we co-invest together, but we also kind of help manage some of these funds. So, and just if you want to just take a screenshot of this, but we also have a deal share platform, which is super hard to make it work. But we have about 70 enterprises who actually, are putting their information out there when they are fundraising. We have about 50 investors there. Though all the matchmaking happens offline, but at least it's just good to see and build some level of transparency. And lastly, if you know anybody who is looking for any kind of working capital, we have who wants to provide the working capital, we have incentives for those investors. And if you know any entrepreneurs who are looking for financing beyond 250,000 pesos, then we also have a product. We are co-creating these products with about these 12 financial partners, and so it really is tailored to their business model. All this takes a lot of work, but I think my realization of now, I did not think that I'm going to live in the Philippines for a decade. When I came, I was like, okay, I'm going to set up this incubator, then I'll go to the next country and set up the next incubator, and then I realized, okay, the problems are so deep, you can't just leave it and go. So I'm still here. And I think, being here and longevity is really important in the development work, because things take time. But I think there are some things that we have to accelerate, because we have to be honest to compare ourselves to Indonesia, Vietnam, who I would say when I was choosing to come to Southeast Asia, everybody kind of looked the same, stage-wise. But somehow we have been a little bit stagnating a bit more, and I think facing some hard truths will help us. But more importantly, unlocking this money that is already here towards these right enterprises, to the enterprises that are doing really good work. I think that's a moral responsibility for all of us. So thank you so much for your time.